I mean, they're a strong set of numbers. Revenues are up 65% compared to last year, and order intake for the quarter is around 980 crores. Shishir Joshipura is CEO and Managing Director of the company. Is joining us right now to take some questions. Shishir, great to have you with us here. If you can provide us with an overview on the strong performance, and then kind of detail the market share in the development of domestic ethanol plants. What did that stand at as at the end of the second quarter? And then at the end of the first quarter, that was 60%. Go on.
Good morning. So the phenomena of energy transition has continued to play out. The canvas is continuously developing more and more favorably, as we have spoken. The EBP20 program is rolling out very, very strongly. And as we had mentioned last time also, that we do have a significant market share. And we have actually continued to build on that share in this quarter. We have actually improved our market share from 60% on the upward side of 66%. So we have actually seen a positive movement on the domestic side. The whole phenomena of energy transition has actually created a much higher degree of awareness and a sense of urgency, even in international markets. So although there was this lull because of the holiday period and the war that continues to rage in Europe, I think the clear understanding is that people are now beginning to very seriously evaluate actions that need to be taken on ground for driving the whole phenomena of energy transition, and that's where we believe that there'll be even more exciting opportunity as we move forward.
Okay, Mr. Joshipura, good morning. Recently you were on a part of our show a while back, and you mentioned that you're guiding for a 30 to 40% growth with double-digit margins. Can you give us a timeline on when Praj Industries could hit that double-digit margin mark? Well, I had said that we are looking forward to a period where a 30-40% kind of a growth is something that we are foreseeing for ourselves in foreseeable future, and that's what we have gone on record to say. The margin is a matter of many other dimensions that come to play, so I'll become almost like looking into a crystal ball, which is not possible for me. But the fact is that as we start to grow more, as we now come out of a cycle where commodity prices have no longer the volatile that they were before, with a higher mix of international business walking in, we will start to see improvement in margins. Okay. So you may not be able to give us a timeline in terms of when double-digit margins may come through, but exports come with better margins, right? And over there as well, I think currently you have 18% led by the engineering business, and it's expected to go up to 30 to 40%. Can you tell us by the end of this year, what would the contribution be both in the engineering business and from high purity? So, very well said. I think, yes, export business is more margin lucrative, no question about it. And as I mentioned, that the whole phenomena of energy transition is actually pushing a sense of urgency in several markets that we are serving right now. There are the IRA Act in the United States is expected to drive a lot more capacity creation for the bioenergy side, and we will see those results roll out as the time goes by. Our engineering businesses have also been doing pretty strongly, and that's the good news, that while there is a very, very strong wind in the sails for the domestic ethanol business, our engineering businesses have also picked up strongly, especially our chemical process equipment and systems business, which offers a modularization solution for customers who are outside India. They are also seeing very strong traction and growth on them. So in spite of very, very strong tailwind on the sale of the domestic ethanol, we will be able to more or less manage the ratio of our engineering businesses versus our bioenergy businesses as traditionally have been, and that would show that there's a very strong growth on the engineering side as well.
All right. By the way, the Piramal Pharma business is making its debut separately. I mean, the demerger went into effect about a month and a half ago, and now we have the pharma business listing separately on your screen now at about 195. It's that's where it is starting right now. At this point in time, lots of interest. I mean, it's a high margin business, lots of sort of high recall value, high margin OTC products, and it's done quite well. So that is a very, very interesting one. Something which Mr. Ajay Piramal, you saw in there, has spoken about for some time now. Just to get back to Praj, sir, in terms of order inflow, I think the peak was 2 quarters ago, and ordering has been coming off. It's still strong on a year-on-year basis. Can you tell us if there is any softness at all, or things are pretty solid?
Well, we are not seeing any softness. It's just, the nature of the business is such that, and there's a deadline of 30th September. So So we have a pretty strong discipline rule for that. So I don't see there is no slowing down. We are not anticipating any reduction in order intake speed. In fact, we have already said that in the past as well, that in H2, we also see, we expect that our export business booking will start to pick up at a significantly higher pace than what it has been in H1 of the year, which by itself, by its own standard, has been our best half on most of the counts ever.
Okay, we'll let you go on that note, sir. Thanks.